Hey everyone, welcome back to Iraqi Dinar Update. Say your go-to channel for real intel, no hype. This big alert today. Iraq's warning oil could hit $300 per barrel amid the explosive Iran-Israel crisis. This isn't speculation, we're talking an emergency press conference, stacked microphones, and serious tone from Iraqi officials. If you're watching the dinar, global currency, or oil markets, this is the moment you need to understand. Stick with us as we break it down, what it means for Iraq, for investors, and for the future of the dinar. Let's get into it. The warning coming out of Iraq right now is nothing short of alarming. We are looking at a situation so volatile, so geopolitically charged, that the ripple effects could shake the global economy in a way we haven't seen in decades. Iraq is now cautioning that oil could skyrocket to $300 per barrel if the ongoing escalation between Iran and Israel turns into a broader conflict, to what some officials are now calling a blood storm. Let that sink in. $300 a barrel. That's not just a spike. That's a financial earthquake. Now, before we dive deeper, we need to understand why this is such a serious warning and why it's coming from Iraq, one of the world's key oil producers and a central player in the Middle East. Iraq is not just idly speculating. The foreign minister didn't just step up and throw out numbers. This statement came during an emergency press conference, where, and I'm not exaggerating, nearly 30 microphones were stacked in front of him. That visual alone should tell you everything. Iraq is not just commenting, they're deeply, visibly concerned. This level of urgency is rarely seen. When the Iraqi government gets this vocal and this public, it usually means they are either directly impacted or are bracing for economic and political turbulence of historic proportions. You might be asking, why would oil reach such staggering levels? The answer lies in the fragile energy supply routes and the geopolitical powder keg that is the Iran-Israel relationship. If direct conflict breaks out, or even if regional proxies like Hezbollah or the Houthis increase their involvement, the Strait of Hormuz, through which 1/3 of the world's oil passes, could become compromised. That's a red line for global energy markets. Iraq, sitting at the crossroads of these dynamics, feels the pressure immediately. Its economy is still heavily reliant on oil revenues. Investor confidence in the country is already fragile due to ongoing political instability, corruption, and of course, the unresolved revaluation of the Iraqi dinar. If war breaks out, that fragile trust will likely collapse, at least temporarily. So yes, when Iraq is upset, or when Iraqi officials are sounding the alarm like these, investors take notice. And they should. What does this mean for those watching the Iraqi dinar? That's the million-dollar question, isn't it? Here's the truth: while high oil prices are generally seen as positive for Iraq's long-term fiscal health and therefore, potentially supportive of a stronger dinar, the context here is more complicated. If oil hits $300 per barrel under conditions of war, we're not talking about healthy market dynamics. We're talking about panic, uncertainty, and possibly even capital flight out of Iraq and neighboring countries. Investors who were already speculating on a dinar evaluation are now stuck between hope and fear. Hope, because in theory, higher oil revenues could eventually support a stronger, more stable dinar. Fear, because geopolitical instability delays everything: our foreign investment, currency reform, international banking integration, and, yes, any chance of a near-term RV. Let's take a moment to talk about that the infamous revaluation. Many in the dinar community have long believed that Iraq is preparing to move from its current artificially suppressed rate to a more globally representative one. Some have speculated about 1-to-1 parity with the US dollar. Others are more cautious, expecting a more gradual appreciation. Whatever your stance, know this: any potential RV depends on Iraq being seen as a safe, predictable, and sovereign economic actor. Right now, Iraq is being dragged into a regional quagmire not entirely of its own making. That creates friction. It delays progress. It causes policymakers to pivot from reform to defense. And it makes international financial institutions more hesitant to engage in meaningful monetary restructuring. Still, this doesn't mean the RV is off the table. Far from it. Iraq remains incredibly wealthy, possibly sitting on more than $17 trillion in oil and mineral assets. That number isn't fantasy. It's grounded in geological and fiscal reports. Iraq is one of the most resource-rich nations on Earth, and that fact hasn't changed. But geopolitical instability slows down the mechanisms that could unlock that wealth for the benefit of Iraq's currency and its people. Foreign oil companies scale back operations. Infrastructure projects get delayed. Central bank policies shift towards stabilization rather than liberalization. And most importantly, trust in the system both domestically and internationally starts to erode. That's why this oil warning is such a critical pivot point. If you're a dinar investor, or even just a curious observer of global currency shifts, you need to pay close attention not just to oil prices, but to the narrative coming out of Baghdad. Iraq is walking a tightrope. On one side is economic opportunity, on the other, regional instability that could send everything into a spiral. It's also worth noting that behind the scenes, Iraq has been making steady progress toward financial reform. They've tightened controls on the black market currency flow. They've initiated banking modernization programs. And they're continuing to engage with the IMF and World Bank. But that momentum can be derailed quickly if the region descends into chaos. We are at a moment in history where the global financial order is being tested. Currencies, alliances, trade routes, everything. The Middle East is again at the center of it all, and Iraq, by geography and by economic importance, is in a position that will either elevate it or expose its vulnerabilities. This is not a time to panic, but it is absolutely a time to be alert. If oil does rise to $300 per barrel, that will send shockwaves through everything: global inflation, interest rates, supply chains, and yes, currency valuations. The dinar won't be immune to that. In fact, it could become a focal point. But timing is everything. And right now, we are not in a phase of rapid appreciation. We are in a phase of global recalibration. So to my fellow followers of Iraqi Dinar updates, stay grounded. Stay informed. Don't fall for hype. Don't dismiss warnings either. Iraq just gave us a massive signal. They did it publicly. They did it emotionally. They did it with a tone we haven't seen in years. When Iraq speaks like that, the world should listen. And so should we. This isn't just a headline, it's a wake-up call. Iraq's warning should have everyone on alert, from casual investors to global analysts. The revaluation, oil, and geopolitical future of the region are all intertwined. If you found this breakdown helpful, hit like, subscribe, and turn on notifications. We've got more updates coming fast. Drop your thoughts in the comments. Are we heading toward $300 oil, or is this just political smoke? Until next time, stay sharp and stay informed.